No excuses, we warned you about this one. Now, if you were lucky enough to watch our intervention video on Thursday, you already knew that dollar yen was a chart to watch. Now, on Friday, dollar yen fell about 200 pips in just 5 minutes, and after stabilizing for a few hours, basically continued to fall into the close. Now, here's the key thing. That first drop, even though it was punchy, it was too small to be intervention. It was likely only what we call a rate check, which is basically when officials test liquidity and send a warning to markets that they are watching prices. Now, the realization that it was a rate check did calm things down a little bit until the narrative started to shift. Later, we had rumors hitting the wires that it wasn't Japan doing the rate check, but it was the New York Fed asking banks about dollar yen levels. Now, that triggered a much more nastier as well as a more sustainable unwind in the dollar yen, because the risk of a coordinated intervention could be quite big for markets. So what do we do with this information coming to the desk on Monday? Well, rate checks don't guarantee intervention, but I mean, after the move lower, many analysts do think that Japan can still drop a bomb and push the dollar yen lower with actual intervention. So that itself could keep pressure on the pair coming into the open on Monday, so that's one to watch. Also, watching dollar yen throughout the session closely on Monday will be important, especially during both the Tokyo and the US sessions, in case Japan decides to bring the heat. Things could get really spicy really quick, so the message from Friday is do not get too comfortable.